Bitcoin, the world's leading cryptocurrency, continues to capture global attention as its price and market activity reveal significant movements. On January 21, 2025, Bitcoin, BTC, is trading at $102,133, marking a 5.40% decrease from the previous close. This dip comes after an intraday high of $109,140 and a low of $100,145, highlighting the volatile nature of this digital asset. Below, we dive into the key developments shaping the current Bitcoin landscape, analyze market trends, and explore the factors driving its recent performance. Recent market dynamics. The trajectory of Bitcoin over the past few months has been shaped by a mix of macroeconomic, political, and institutional factors. Let's break down some of the pivotal events. November 6, 2024. Presidential election rally. Bitcoin reached a record-breaking $75,060 on November 6, 2024, surpassing its previous peak from March of the same year. This surge coincided with the U.S. presidential election results, where former President Donald Trump led Vice President Kamala Harris in Electoral College votes. The election's outcome sparked optimism among investors due to Trump's historically pro-crypto stance, suggesting a more favorable regulatory environment for digital assets in the U.S. November 12, 2024. Momentum builds. Just days later, Bitcoin continued its climb, hitting $89,000. This rapid ascent resulted in significant liquidations across the market, with over $659 million wiped out in a 24-hour period, predominantly affecting short positions. This level of activity underscored the heightened volatility and interest surrounding Bitcoin during this period. November 23, 2024. Institutional inflows surge as Bitcoin approached the $100,000 milestone. Institutional interest reached new heights. Bitcoin exchange-traded funds, ETFs, saw near-record inflows of over $1 billion in a single day. BlackRock's iShares Bitcoin Trust, IBIT, led the charge with $608 million in contributions. This development pushed U.S. Bitcoin ETFs to a total of $100 billion in assets, equivalent to 82% of the total value of gold ETFs, solidifying Bitcoin's position as a key player in the global financial landscape. November 27, 2024. Long-term holders take profits amid the rally. Long-term Bitcoin holders liquidated approximately $4.2 trillion worth of BTC, marking the largest sell-off since April 2024. This wave of profit-taking signaled caution among seasoned investors, raising questions about the sustainability of the rally. Current market analysis. Bitcoin's recent decline to $102,133 can be interpreted as a market correction following its meteoric rise in late 2024. Market corrections are a natural part of cryptocurrency cycles, especially in response to rapid price increases. While short-term volatility may concern some investors, analysts remain optimistic about Bitcoin's long-term potential. Key price levels to watch. Technical analysts suggest that Bitcoin faces significant resistance at the $100,000 mark. Should it surpass this threshold with sustained momentum, it could pave the way for further gains, potentially targeting the $120,000 to $130,000 range. Conversely, failure to hold above $100,000 could lead to a retest of lower support levels, such as $90,000. Institutional influence. Institutional adoption continues to play a critical role in Bitcoin's market dynamics. The influx of capital from ETFs and hedge funds has increased market liquidity and legitimacy, but it has also introduced new complexities. Institutional players often employ sophisticated trading strategies that can amplify market volatility during periods of uncertainty. Regulatory developments and political impacts. The regulatory landscape is another key factor influencing Bitcoin's performance. In the U.S., the election of Donald Trump has reignited hopes for a crypto-friendly administration. Trump's campaign emphasized reducing regulatory barriers and fostering innovation in the blockchain and cryptocurrency sectors. This policy shift could attract more institutional investors and further legitimize Bitcoin as a financial asset. Globally, countries like El Salvador continue to pioneer Bitcoin adoption, using it as legal tender and integrating it into their economic frameworks. Meanwhile, other nations, such as China, maintain strict regulations, creating a patchwork of policies that shape Bitcoin's global accessibility and adoption. Broader market context: Bitcoin's recent performance is not occurring in isolation. The broader cryptocurrency market has seen similar trends, with altcoins like Ethereum, ETH, and Solana, SOL, experiencing both gains and corrections. Additionally, macroeconomic factors such as interest rates, inflation, and global economic stability are influencing investor sentiment. Comparisons to traditional assets: Bitcoin's rising popularity as a store of value has led to comparisons with gold. While gold remains a traditional hedge against inflation, Bitcoin's digital nature and finite supply offer unique advantages. The increasing allocation of funds to Bitcoin ETFs at the expense of gold ETFs underscores this shifting dynamic. Conclusion: navigating the road ahead: Bitcoin's journey to its current price of $102,133 reflects the complex interplay of market enthusiasm, institutional adoption, and regulatory developments. While the recent dip may prompt caution, the overall trend suggests a maturing market with strong long-term potential. As always, investors should remain vigilant, stay informed, and consider the inherent risks of the cryptocurrency market. As 2025 unfolds, Bitcoin's performance will likely remain a focal point for investors and analysts alike. Whether it continues to break records or encounters new challenges, one thing is certain: Bitcoin is here to stay as a transformative force in the world of finance.